For once, it's not about the oil. Hello and welcome to today's Daily Blitz. Now, as I'm sure you will have seen, plastered all over the media is the idea that World War III is about to occur thanks to America's drone strike on an Iranian Revolutionary Guard general in Iraq. However, when you're thinking about the investment side to a World War III or a possible World War III scenario, you need to factor in what is going to go on with the oil price. Now, to make it clear, I don't believe there will be any World War III. I don't think America is going to invade Iran, as many people believe is going to occur. Just for starters, you would be able to tell that an invasion was about to happen simply from the huge logistical build-up that would be required months in advance, and it would be very visible, not to mention the fact that it is an election year. However, that doesn't mean that this big confrontation won't affect asset markets one way or another. And generally, when it comes to geopolitical events, it's the oil price that really makes shocks occur that can really trigger big spillovers into the bond and equity markets. So when we're looking at the oil market in general, you should know how the oil market has changed hugely. So the last time that Iran was playing these games on a really big scale was back in the 1970s. And back then, as you can see from this chart, Iran was a massive oil producer, and it could really shake the world just by merit of the amount of oil that it produced per day. But as you can see, Iran has seen better days when it comes to their share of the oil market. So Saudi Arabia took over back in the 70s when Iran started cutting back, and now Saudi Arabia can push out 10 million barrels a day, while Iran can only muster really around 2 million barrels a day. Now, it should be noted that yes, Iran probably does sell an awful lot more oil just on the black market, but not in any massive, noticeable sense when you're talking about the grand aggregate figures. However, that was back in the 70s. Now it's now. And now, the US has become the world's largest producer of oil. So it used to be back then that the US was the one consuming all of this oil, which is why they needed all of these agreements with all these different Gulf states about military aid and not minding about their political affairs. But now that doesn't really matter so much because, the US is now the world's largest producer of oil. If the energy agency in the US is correct, then the US will produce an incredible 13 million barrels of oil a day this year, which is absolutely huge and just an astonishing figure in of itself. But that does change the power dynamics in the Middle East, and it does lead to some rather interesting theories that you've come up with, Nikolai.
Yeah, I was thinking about this today, and it seems to me that if America's gone from being an oil consumer and importer to being a producer and exporter, that changes the whole power dynamic with the Middle East as well. And you can't go with the same geopolitical theories and explanations for what's going on. So my theory is that all of this mess in Iran and the controversy and the spike in the oil price, it's actually all about US domestic politics and the presidential campaign, effectively. What you've got in America is a huge amount of marginal oil producers in important political states. And these companies are struggling because the oil price is not high enough. Now, if a higher oil price is engineered in international markets, all of those oil companies suddenly become more viable, and you get a real boost in these important political states. And I think that's what Trump is doing. He's basically trying to goose the US election.
So in this scenario, it's not actually about Iran's oil at all. It's actually about keeping the frackers in Texas and the other southern states afloat. Well, there you have it, folks. That is today's Daily Blitz. Hope you enjoyed it, and be sure to tune in for the next one.